Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, June 2nd, 2009. The Reserve Bank of Australia held rates steady at 3% today, which is a 49-year low. The accompanying statement said that the global economy is stabilizing, with emerging economies and China leading the way. However, the developed major countries may see a slower recovery when it occurs. The Australian economy, meanwhile, continues to contract, which is putting downward pressure on wages and inflation, though a pickup in housing credit demand is a positive sign. Even though the bank has cut rates now by 425 basis points since September 2008 in response to the financial crisis, the bank held out the possibility of further easing at the end of its statement. The Aussie-US dollar pair fell in the aftermath of the RBA decision, as the chance of lower interest rates should theoretically hurt the Aussie. However, after testing the 0.8050 level in European trading, the pair's bulls pushed it up to the 0.8220 level, breaking through yesterday's high. In the last 4 sessions, the pair has climbed about 480 pips as an increase in demand for commodities and signs of the global recession easing boost the appeal of the Aussie as a high yielder. The Swiss economy shrank less than expected in the first quarter, posting a quarterly decline of 0.8%, which follows a downwardly revised 0.6% contraction in the fourth quarter. It's the worst decline in GDP in nearly 15 years. The decline was led by a 5.4% drop in exports and a 0.4% decline in capital spending. A second report from Switzerland, the SVME's Purchasing Managers Index, rose in May to 39.8. It's the second straight month that the indicator has improved, breaking a 15-month downtrend. However, the PMI remains well below the 50 level. The Euro-Swiss franc pair rose in today's trading, climbing to 1.5190, mainly in late New York trading. The pair had slid last week, but with an increase in volatility this week, the pair has bucked its short-term downtrend. The trend line connecting two recent major highs acted as support in today's trading, following a dip in European session. In the UK, there were 43,000 new mortgage approvals in April, the best figure in over a year. It's another sign that the UK housing market slump is beginning to ease. Net mortgage lending rose to £1 billion. A second release from the UK, the construction PMI, rose to 45.9 for the May period, a robust increase compared to the 38.1 registered in April. May's figure is the highest in 12 months and adds further evidence that the UK housing sector may be beginning a recovery. Better UK housing data, which had underpinned some of the recent gains by the pound, and today the pound-dollar pair hit a fresh multi-month high, rising above the 1.65 level, which acted as resistance yesterday. Following a dip in overnight trading, the pound rallied 215 pips as US stocks rose, increasing risk appetite, continuing a theme seen the past several sessions. The unemployment rate in the nations that make up the Eurozone rose to 9.2% in April, a bigger jump than expected, and the highest unemployment rate in almost 10 years. The global recession has sapped demand for the region's exports, which has cut into industrial production and investment. That has caused a large increase in layoffs. Despite some signs that the Eurozone economy's recession may be easing, the deterioration in the labor market will hamper any recovery, making it a prolonged and slow recovery when growth starts once again. In the U.S., meanwhile, pending home sales rose 6.7% in April, a bigger than expected increase and the third straight month that pending home sales are up. Pending home sales act as a leading indicator for housing market activity, as it measures the number of contracts signed to purchase a home before the actual closing. The increase this month was fueled by record low mortgage interest rates and an $8,000 first-time buyer tax credit. The euro-dollar pair, similar to the pound-dollar price action we already saw, fell overnight only to test support but then surged in New York trading. The euro retested the 1.41 area, which was yesterday's low around the time of the Eurozone unemployment release, but then, boosted by higher stocks, continued its rally, which started last Thursday. The US dollar-Canadian dollar pair retested its support at the 1.08 level following a retracement of its 3-session down move that saw the pair run up against resistance at 1.0970. From there, the pair fell 170 pips in the 3 hours prior to the New York Open, after which it consolidated. It is now down 460 pips since Thursday's high. Coming up tonight, the UK will release data on consumer confidence and retail prices. Australia, meanwhile, posted services PMI and its GDP data for the first quarter. Overnight, the UK will reveal its services PMI, and the Eurozone will unveil producer prices, a revised version of first quarter GDP, and its final version of May's services PMI. Tomorrow, the US will unveil 3 releases: the ADP employment change, the ISM non-manufacturing index, and its factory orders for the April period. And that wraps up today's coverage of the Forex market. Thank you for joining us here at CMSFX.com, and happy trading.